This is a area of price that I expect the price to reverse. But then what do I do from there? That's the question, right? Do I enter right away as it wicks up? Do I wait for a little bit of confirmation, enter once it's shown me that it is in fact working? Do I scale out? There's a lot of questions to how to do this properly. Here's my actual entry where I thought it was a good entry. The first step is finding points of interest where price will go into and offer the reversal. It's not going to offer the reversal until it has completed whatever downside, upside objective that it had, which is 99.999% of the time that is going to be filling in inefficiency. Some will tell you it's liquidity, but if you truly learn how price is booking, you'll quickly understand that it's very rarely is a liquidity, almost never, because the liquidity will be like up here above this high. Like, let's imagine that this is equal highs here, and then let's go ahead and imagine that this is your inefficiency. As price went down in there, it created an inefficiency there. When price comes up here, people are like, oh, it's the liquidity, but why doesn't it stop immediately after purging the liquidity there? You would think that that would be it, and then it would immediately go back inside the range. No, that's why it's all over the place. 10 points, sometimes 2, sometimes 30. You never really know. So that's why, is because it's got to continue up past the point of liquidity, fill the inefficiency, and then purge, and now it can revert because it purged the liquidity, filled the imbalance. So knowing that, we're not going to look for just liquidity, right? We're going to look for points of interest that have both liquidity and then an inefficiency on the other side of it. But I'll show you a little trick to consolidations for re-entries. We'll go into this more later. You take the consolidation low to high, you'll get this here, which is going to be 50%. But what if you go like this? Boom. Another little nuance there that not many know of. Take the consolidation, but you leave out this part. Just go with that part. I'm going to add on to the funded account here. There it is. So that's $1,000 on the day for the funded account here. I'm going to take one off there and then scale out some of these too. Take off one more because it could obviously go up a lot higher, but I don't know that 100%. $920. Boom. All right, I'm gonna have to really scale out here quickly. All right, I'm gonna go ahead and fast forward when I edit this because it's gonna take me a second to do so. All right, so I went ahead and exited all of them as it pulled back here, knowing that this is likely to happen. We have this volume imbalance here that's filling. Now, is the uptrend dead? Is it likely to pull back more? How do you tell? We're gonna use market structure, which this part of the video is going to be towards the end because I need to go over steps 1 and 2 for you to be even thinking about this part. About points of interest for reversals. Price came down to here, bounced, but why? And why would I be comfortable taking long here? You have to trust this system and doing it. We're going to look to the left, consolidation before a move up, right? Now, so we're going to draw it out. Boom, there's your consolidation, right? Now, where's the first pullback after it left that consolidation? So it went up. Here's your first pullback. So now the consolidation of that pullback, that's right here. These first pullbacks offer great support because they're already balanced, right? Prices coming back down, like I talked about, for balance and liquidity. Where's the liquidity? You have a lot of session lows here. That's a lot of liquidity there. You notice how it came back to fill the inefficiency. It didn't care about the liquidity. It kind of like sets it up. It's a two-part thing. It's not one. And it's not just liquidity. It's not just inefficiencies. You need both for like really high odds setups here. From here to here was only buying taking place, right? From there to there. That's a true inefficiency there. Most people think they're fair value gaps. They're not. Is this a fair value gap? No, but it is a void of selling in this, where this blue line's at. From there's no selling that took place in this area. So that's why price came back down to here, the last point of selling, and then dips and rips. That is points of interest. Let's go into time and price. time and price. I call these turnaround times. These are the main 4 that I will look for throughout a 24-hour period. Still got macros for every 10 minutes of the day, but what's the point if it's not something that's rare or doesn't happen very often? Then it's likely the win rate's not going to be that good. But I know these times are really well, especially the last 3, 11 a.m., 1 p.m., and 7:30. You have to give these 15 minutes on either side. So it'd be 10:45 to 11:15, 12:45 to 1 p.m., 1:15 p.m., 7:15 to 7:45 p.m. Those are my turnaround times. And then you'll notice if you do some studying, that's on you guys to do, that these occur pretty much every day. The price has moved back on up here. I exited here. I got kind of shooken out there. Oh, well, it's part of the game. But still long options. Let's go to what you're looking for in here in terms of bullish order flow. The part earlier in the video, I said I'm going to stop it here, and then you need to learn part 1 and 2 first to be able to understand what I'm going to be looking for here. So why would they bring price down like this? Why would it go up here and then back down? It was a buy side inefficiency. Once they fill it in, it's no longer void of buy side. So then price comes down, boom. Where to and why? We're going to look at it here. So let's look at this consolidation low to high. So it went past the 50% of that area. It didn't come down to here. What about that consolidation to the left instead of the whole consolidation? If you look here, boom. So now what we need to see is this low hold here. So why did I choose that high to low? That's a good question. It's kind of hard to verbalize, honestly. So this is the first pullback after this consolidation was broken. Hopefully that makes sense. And that's why I chose that one. So now what I want to do is put a line here. We're going to look for 3 taps. That's a wrap. All right, guys. So what I'm talking about, the setup that I'm talking about in the video right now, is this right here. So you have a big move down, and then it finds some support, just like you're right here. It comes down, finds support, and it rallies up, comes back down, then down again. This third touch here is what I call the third tap. So 1, 2, 3 taps, and that's a wrap, and then it goes up. But why does it work so well? So if you think about how price actually moves, like the framework behind it, it has an expansion phase, which is upward price action that's very aggressive, or downward, and then consolidation, and then a reversal. And it kind of like goes through these 3 at any time. So it can obviously go into an expansion straight into a reversal that then leads into a consolidation. It can also go a reversal that leads into a consolidation to expansion. So all 3 of these are kind of interchangeable. But I would say that these 3 right here are definitely the most common that you see. You see an expansion, a consolidation, a retracement, goes back in expansion. That would be like a trend. This would be a trend. And at the end of the trend, you're going to see a different kind of version of this. You're going to see expansion, consolidation that is extended, and then you finally get the reversal that then will have a retracement, and then a expansion phase in the direction of the opposite of the original direction of the setup. So here, like, it consolidates, you have an impulse leg, and then it either retraces or you get a reversal. But actually how it most likely is going to be, it's going to be consolidate, impulsive leg, and then it consolidates again. So and then retracement, reversal kind of takes place. So that's why this setup here works so well, is because you have move down, a retracement, you get a move down, which is expansion, downward. So that's your expansion, and then consolidation, then you get a reversal, and then a retracement, short-term consolidation, and then back up. So we're going to put a line from there to there. Then we're looking for a pattern that comes up, comes back down, comes up again, comes back down. I mean, 3 lows that are within this line here. And then this is a explosive move that should happen out of here. So now what am I waiting for? See if it's going to do that explosive move. It's going to start that, which it appears it is. But one time framing hasn't ended yet. And I don't want to be going long into one time framing down. So I need, there it goes. All right, so there is our long position. And then we're going to go here into this account as well, long 2. And then my risk is really small because I'm trading on such a low time frame. I'm risking 7 points, 7 times 20, $140 per contract. So that's $280 of total risk on the trade. I would never allow it to get down to my stop. Skill you guys are going to have to develop. Never let your stop be hit. You should exit the trade, not let it be exited. We're looking for clues here. Are there any clues that the price action is bullish? Take this up here so we can see it. So we had price dip down here, came back to where the previous high to the left, which is right there. Let me go ahead and enter on these evaluations too here. That was a bullish that it did that there. That's a bullish thing. And then price came up and it's like bullish order flow, right? This is your first pullback here. This is like your foundation for more bullish price action upward is this pullback here. This pullback here is very important for support. It should not be closed below. It can like wick below it, but a close below it makes it no longer valid. It then it's not valid anymore. Price is moving up here. So hopefully you guys are seeing why I chose to enter here, because I know this setup. I've seen it a million times. And then on top of that, this swing down here acting as support, and then it should stair step it, right? And now this consolidation here should act as support as well. So what we're going to do is we're going to take this, we're going to go low to high of it, and we want to see the 50% area here act as support right there. See that? Isn't that beautiful? Boom, acted as support, right? And now once this low here holds, we can move our stop up below it, but we need to see it act as support first. If it goes below it, I'm gonna have to go ahead and exit because it could come back down to here or even lower, and I don't want to hold through that.
Order filled. Order filled.
All right, so price is moving on up here. I want to talk about what happened here. So I originally had it from that high to that low. And I started thinking, well, that's not the original consolidation before this move up here. It's actually that high to low was the original little consolidation. So knowing that, you have a new 3 taps. That's a wrap setup for me here, just a little smaller one. Because it's fractal, if you look on a 3-minute, this is all going to be the 3 taps right here. You have 1, 2, 3. But really, and then you can break it down 1, 2, 3, because 30 seconds is 10 times smaller. Okay, so now as price breaks this high, I'm going to scale out 1 contract, eliminating my risk. I no longer have any risk on the setup. Like if I get stopped out, no matter what, I'm going to be in profit a small amount. This one, not much, because my entry price is all the way at 48. So that one's not the case, but the other accounts, I'll be okay. Because if I'm scaling out at 53, my entry, or 55, my entry is at 46. My stop's at below this low at 41. So I made 10 points and I'm risking 4. I still get 6 points profit no matter what. All right, so price is moving on up. Now we need to worry about this right here. This dojis. The dojis are consolidations. They're balanced. They're going to act as support and resistance. Now I have another account that I'm trading in right here, so I need to take some of this off here. So $500. And I like to look at this top step tilt indicator. I don't want to be in the same direction that the majority is. They're all long, so that definitely makes me a little bit worried. Doesn't mean like I absolutely think the market's probably going to go down. Okay, see how it didn't get all the way up there? So we're good on this. When it pulls back, this is probably going to be a buying opportunity if anything. But it needs to come near my entry price, which it didn't give me a closing up entry. If it would have went like down to 48, yeah, I might consider entering. There's a little baby volume imbalances here. that I want to mark off. There's one right there that it dipped into, and there's another one right below it. So this can push up with some aggression here I would like to add on, but I would prefer if it went into this lower one here, like it just did, and then respect that, and then I can re-enter. I want to see it take out that candle's high right here first, because it's one time framing down right now, meaning none of the candles highs are being violated as it's coming down. And understanding that I know it could come down to here, that's a possibility, into this area here at 45. All right, there we go. I know you guys want to learn this so you can do this too. All right, I'm going to go heavy into the evaluation account that I'm trading here. I got a lot of confidence in this right now. All right, now we can move our stop up to under this. It should not violate that, and if it does, I don't want to be in the trade anymore anyways. So we'll just put it right below that volume bounce that it went into, which means we're only risking 3 points. Branch is right there. Our stop loss is right there. Where is the break of this high? I want to scale out once it hits this pink line at 56. Now I want to take from that low to this low and take that and use that as like a trend line here. Why do I want to scale out there? Because if it's going to reverse, that's probably where it's going to reverse at. That's imperative that this trend line holds as well. All right, so there's the break of the trend line. I'm going to go ahead and exit here.
Order filled. Order filled.
Doesn't mean it's like absolutely going down. No, not at all. And we're back inside that trend line there. Let's go ahead and enter long here. Let's see, where did it come back to? Yeah, we just want to see it like break this trend line here. All right, I'm going to go ahead and enter long there. And my target's just 2 right there. Like I'll scale out 1 as soon as it hits that line. All right, I'm taking 1 up there. Boom, big move up there. Oh, does this offer resistance or not? If we can get through this consolidation here, then we can really move up, but we need to see this down close candle act as support. Down close candles, when price is moving up and bullish, should act as support. That candle should offer support for any pullbacks. And then previous highs and lows should offer support for pullbacks. If it doesn't, then it's probably going down. It's not offering support at all. But hopefully you guys are seeing like what I'm talking about here. I'm talking about looking at the order flow, gathering clues, looking at the market structure. I'm not going to be able to teach you every single little nuance in one. All right, so price is ripping up, but I just realized I didn't really like explain like how to actually enter the trade. So let's go ahead and do that here. So let's turn on my entry points. So I saw it come into here, like I had it outlined, all of that, but why didn't I enter? Because this entering right here is kind of like a low odds trade. I'm not going to do that in my live account, period. Like I just won't do it. I used to do it. I'm not doing it anymore. I'm trying to like maximize my payouts so I can fucking move to Guatemala or something. I don't fucking know. I just don't want to be in the same kind of like position I am now. Price drops down to here, pops up. You have an intermediate term high here. I look at the advanced market structure constantly. That's what I'm looking at. So the fact that it breaks that intermediate term high there, very bullish. Price then comes back. Where does it come back to? The previous high to the left. That's extremely bullish. Price then moves up, disrespecting all these bearish fair value gaps. Bullish comes up. Then you get a bigger pullback into this volume imbalance here, previous high, and that's where I entered once it found support here, because the fact that it came back down again and bounced again there is just telling me that's really bullish. And then the fact that it didn't just like drop really quickly told me it's really bullish as well. So I entered long there, I scaled out here, re-entered here, and sold here. Let's go to the other account that I traded. I got a little bit later of an entry, like my entry wasn't until right here, but I scaled out, re-entered. So you want to be looking for the clues. The clues are going to tell you everything you guys need to know about what's going on in price. Like, is it respecting areas? Is it not respecting areas? Is it coming back to the previous highs to the left to find support? Yep. This is another good example of it here. So your previous high is way down here, but price isn't going to retrace all the way down here when it's really bullish. So you look for a previous high to the left that's closer, and there's one right here. So price didn't quite fill it in, but that's all right because it's really bullish right now. It's going to here. And I'll show you how confident I am. Live account. So previous highs and lows to the left are the easiest thing to identify, but also the most powerful in terms of support and resistance. So just as earlier, I saw price retrace down to the previous high to the left, and then I was like, okay, I want to long this. And just like here, it came down to a previous high left, not the previous. And then I want to exit into strength here. I will take half off as it comes into my zone. So you guys just saw me make $1,000 almost on this trade right here. These clues in price, once you kind of understand what's going on, it makes you unstoppable as long as you have your mental right. But you have to have your mental right to do this, or else you're going to mess it up like I did for a long time. So by mental, I mean understanding and trusting what you see, listening to your inner voice. Once you have developed it, obviously, like if you're listening too early, then it's going to be creating nothing but a lot of pain for you in your trading. All right, so I hit my profit target there. I'm going to go ahead and exit this if it takes out that candle's low there. Yeah, there it is. All right, so you just saw me make, it was like $600, something like that. But I wanted to prove to you that that the return to the previous high to the left in a bullish situation is extremely bullish. And if it finds support there, because it didn't dip down into the consolidation, it just went to the minimal point of return. So you can think of the previous highs and lows to the left. To go up, it has to do something, right? The least amount it has to retrace is to a previous high to the left when you're bullish, previous low to the left when you're bearish. That's the minimal it has to do. Like, it has to do that for it to go up. But it can also come down 50% of it and then find support and go. But the least it has to do is right there. So if I see that, then I know I'm extremely bullish. So I saw that, entered long, and I saw this area here acting as support, this low, supported this low, stair-stepping, step, 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 and then go. And then we're still stair-stepping, step, goes back down to the step, up, and then now we're right where we're at right now. So that is it, guys. If you're interested in getting funded, trader funding companies that you can actually trust that have been verified by a trader that trades, I created a website, verifiedfundingcompanies.com. Come to the homepage here and you click there. It will take you to my discount page that I update any day, every day, anytime there's a new discount. I will update this with the companies that I trust. I guarantee they pay you out. I actually just met with the owner of Take Profit Trader yesterday. Really good dude. I have a review coming out on my second channel that you guys should check out when it comes out. But these companies, they're legit. If you're a Forex trader, I think you need to get out, man. They're not only screwing you over, but the regulators are done with them. They're shutting them down. So it's not allowed in the US anymore because the United States won't allow their their citizens to be scammed. Like, they just won't allow. Other countries might, but the United States won't. So if they're not allowing it in the US, what makes you think you should be doing it somewhere else? You shouldn't. You shouldn't. You should just go to futures because there's no downside to it versus Forex. And here's my second channel here. It's called Verified Trader Funding. I have a lot of reviews on here of the different prop firms. Yeah, check it out. And then obviously you're on my channel right now. If you want to trade live with me and still doing live trading, you can come on and hop on live streams with me. All you have to do is join the YouTube membership. I made it as cheap as possible that they would allow me, YouTube would allow me to make it, which is $3.99 a month. All right, so if you go to my channel, Easy Money Concepts, let me know in the comments if you like the name change or you think I should change it back. Okay, I'm already subscribed to it, but you would come here and there would be a join button. Where C perks are at, it would be a join button there. So as you can see, every single day live trading or analysis during Asia session one or the other, 6 days a week. So get on it while you can. There's no one else doing it for this kind of like low cost at the moment. So $3.99. All right, I will catch you guys later, and I'll see you in the charts.